Sometimes markets can feel like they're caught in the pull of a tractor beam, drawn towards big round numbers, drawn towards support and resistance levels. We're seeing one now, it looks like, in the Dow Jones Industrial Average. After the U.S. election, initially we saw the Dow fall to about 17,500 and then quickly rebound back up towards the 19,000 level. What's really interesting is for a while, we had an initial rally and upward momentum seemed to be moderating and it was leveling off just above the 19,000 level. In the last week or so, though, the Dow has suddenly become just relentlessly drawn towards the 20,000 round number. It just feels like it wants to take a run at it and test this big number here, and we can see these huge gains as it's starting to advance on the 20,000 level. With Rogue One coming out this week, it has me thinking of getting caught in the tractor beam of the Death Star and just dragged in to the hangar, and that's what it almost feels like here. So we're getting very close to it now, but we're also getting extremely overbought on the RSI, and it does raise a concern of what could happen if we actually do get to 20,000, which is a huge psychological barrier. It could be seen as a huge banner day for the Dow, and it'll attract a lot of attention in the media and around the world from traders should we get to this big round number. But then the question becomes, then what? Because what concerns me is that I've seen this happen before, and it ended in tears, which is something that we want to be watching out for as traders. And I think back to the silver market, back in the earlier part of this decade, 2010, early 2011. Just to go back very briefly, back in the 1970s, in that commodity boom, silver reached a peak of $50 and then tumbled. In this boom here, we saw in late 2011, silver started to march up from about the $18 level, took a run initially to 30 where it stabilized for a while, and then this tractor beam effect took hold again, and it just took off, and it was just felt like somebody out there, or people, a group of traders out there, wanted to retest that $50 level, and we just had this relentless drive up, and the closer we got, the more it accelerated, and it just kept getting pulled closer and closer as people realized that this retest was in reach. And what happened? We got right up to about 49.75, almost to the 50, and then it started to tumble. And then once things started to tumble, then the snowball effect took over, and once the people realized the ride was over, then kaboom, the silver price quickly found itself back in the 30s, 30 testing, 35, drifted around in the 30s for a while, and now it's back trading at 1680 today, pretty much where it had started before this rally began in late 2010, early 2011. So sometimes these markets can take on a life of their own. Sometimes things can find themselves drawn towards round numbers, but once that's achieved, and if people do decide to start taking profits, the index, the market could become very vulnerable. In the case of the Dow here, we look at this and we can see that it actually is could have quite a bit of room to tumble. I'm just going to draw in a quick Fibonacci here, which is off this low here, and let's do it to 20,000. We can see a 23% retracement would take you back to 19,390. This first support here is about 19,610. This one here is about 19,250. So there is room for a potentially significant tumble here.